All right, folks, the data is clear. The property bubble, the housing bubble that we're seeing in America right now, it's not just in America, it's all over the world, no matter where you look. The US, China, England, Germany, Slovakia, Australia, Canada, no matter where you look, there's a big housing bubble. Prices are surging out of control. And this is such an important thing to understand because if you're a home buyer or a real estate investor, anywhere in the world right now, you want to know fundamentally, is your country in a big bubble and will prices be crashing down? Luckily, I'm going to help you guys figure that out in this video. We're going to look at three principal things. Number one, we're going to look at the countries around the world with the biggest increase in home prices over the last 12 months in nominal terms. And boy, let me tell you, some markets are looking very bubbly, very frothy right now in certain countries. Number two, we're then going to take a longer term perspective and look at how much home prices have increased over the last 5 or 6 years country by country, adjusted for inflation, so you can see over the long run which countries are in the biggest bubble. And then third thing we're going to do, which is something that a lot of you have been asking for and waiting for, is we're going to analyze China, specifically companies like Evergrande and the impending economic and housing collapse in China, and how this could actually create contagion that spreads and then dooms and crashes housing markets around the world. You're going to want to stick to the end when we analyze that, because here's the thing. Certain countries are really exposed to contagion from China. Other countries are not. You're going to want to understand where your country, and then specifically where your local housing market sits. All right, everyone, without further ado, let's get into the data. As promised, everyone, here are the top 10 countries in terms of home price appreciation over the last year. This is data that comes from the OECD. I'll have a link to it in the description if you want to check it out for yourself. We can see number one is Turkey. I bet you guys weren't expecting Turkey at number one. 30% home price appreciation over the last year. Number two is New Zealand. 29% home price appreciation. Really, these two stand out above everyone else in terms of how much home prices have gone up. Then if we scroll down to number three, we can actually see Russia with a 21% increase. So I think that the top three markets, the top three countries for home price growth are probably not ones you would have expected for most people. But then we can see number four, this is one you might have expected, the good old US of A, 17% increase in home prices year over year. This is the fourth largest of any country in the world. And so this is really important for all my viewers and watchers in America to understand, is that the home price growth we're seeing in the US, not only is it unprecedented historically in US history, it's now unprecedented internationally. It's the fourth highest in the world right now, the second highest of any large country. That's got to make you feel a little concerned, right? That home prices in America are going up way more than most other countries. Let me give you a bit more context so you can see how crazy this is. If we keep scrolling down this list, we can see right below the US, Sweden's at 17%, Australia's at 17%. Denmark's at 15%, Czech Republic at 15%. Then we got Canada at 14%. And Canada, folks, boy, this is one of the biggest housing bubbles in the world. As we'll see in a second, not only has Canada increased prices a lot in the last 12 months, it's had huge growth over the last 5 years. If we scroll further down this list, we can see that the average country has experienced 10% nominal appreciation year over year. Countries like South Korea and the UK are around that average rate. But if we scroll down all the way to the bottom of this list, we can see there's some countries that really aren't in much of a bubble right now, that aren't experiencing home price increases. Italy would be one such country where values really haven't gone up. Values really haven't gone up in Brazil, Saudi Arabia, or Indonesia either. As well as, interestingly, China. China has only experienced a 4.5% increase in nominal home prices over the last year. But really what we need to look at here is not just nominal increases in prices over 1 year. We need to look at increases in prices over multiple years, 5 to 6 years in fact, and not just nominal, but actually adjusted for inflation, because as I'm sure you all know, there's huge inflationary pressures in America and the rest of the world right now, and that really the true mark of home value growth and really a destabilized housing market is not just prices going up on their own, it's prices going up well above inflation. That's the real key to spotting a housing bubble, when the prices of homes go up more than the prices of other goods and services in the economy. So for instance, if all of a sudden home prices are going up by more than a loaf of bread, more than the cost of a bicycle, more than the cost of a haircut, that's the sign that you could be in a housing bubble. So let's take a look at some of these countries over a longer period of time. And so we're going to actually start things off by looking at China since 2015. And you can see Based off this data from the OECD, China has seen a 33% increase in its inflation-adjusted home price in China. That's what this index value of 133 means, is that it's 33% higher than it was at the start of 2015. And that is crazy high growth in China over the last 5 years. But you can see most of it actually occurred 2015, 2016, 2017, 2018, and that in recent years, the growth in China has abated a little bit. So that's the key point, right? In the last 12 months, China hasn't grown so much. The housing market is slowing there, and that's causing some of the issues we're seeing with property developers like Evergrande, which we're going to get to later in the video.
If you guys are enjoying the data in this video and you want to see more of it going forward, just make sure to smash that like button, hit that like button super hard. When you do that, it gets me more exposure on YouTube, allows me to produce more of this content going forward.
But what's really fun, folks, is when we start coming in with some comparisons here, and let's bring in America. The inflation-adjusted home price in America has gone up by 39% over the last 6 years. And you can see actually that this means that prices in the US over the last 6 years have gone up by more than they have in China. And that's pretty crazy, folks, because China is kind of universally regarded as being the largest housing bubble in the world. And I think that is an accurate sentiment when you look at the value of Chinese real estate compared to incomes. It's extremely bloated. However, the fact that America is going toe-to-toe with China in terms of inflation-adjusted appreciation the last 6 years is pretty crazy. It suggests that America is in one of the largest housing bubbles in the world. But of course, that's just two countries. Let's add some more so you can really get some flavor and perspective for the markets, the countries with the biggest bubbles and the smallest bubbles. Oh boy, folks, we got a lot of lines on this graph now. We added pretty much every country with over 20 million people in the world. And you can see that of all of these countries, one sticks out as potentially being in the largest bubble, and that is Canada, where inflation-adjusted prices have gone up by a whopping 43% over the last 6 years from 2015 to 2021, according to this data from the OECD. That is absolutely crazy. Canada's housing bubble is massive. It might be the largest in the world. And, they managed to avoid the last housing crash, 08, 09, 2010. I don't think they're going to be so lucky this time around. If we keep scrolling down, we can see Germany is right next to the US in terms of a 39% increase in real home prices over the last 6 years. So Germany's in a big bubble right now, as is Russia, as is China, as we talked about before, and maybe even a country like Poland. Meanwhile, on the other end of the spectrum, we have Brazil and Saudi Arabia, where inflation-adjusted prices have actually gone down by 20% over the last 6 years. So these housing markets in Brazil and Saudi Arabia have gotten way more affordable, completely the opposite end of the spectrum from the Canadas and the Germanys and the US's, Saudi Arabia and Brazil. Meanwhile, a place like Italy is basically flatlined in terms of home prices over the last 6 years. There's been no growth in inflation-adjusted home prices in Italy, while places like India, South Korea, Japan, and France have had marginal increases over the last 6 years. So if you're an international real estate investor looking for a deal, looking for a steal, maybe you go to Saudi Arabia or Brazil, where home prices are 20% cheaper today than they were 6 years ago. That could be an option for someone who wants to take a chance, maybe get an affordable bargain bin acquisition. Additionally, a place like Italy could offer some interesting affordability. Prices there literally have not gone up in 6 years, which means they're still pretty affordable today. At the complete other end of the spectrum is Canada, is Germany, is the US and China, where prices in inflation-adjusted terms have gone up by around 40%. That's crazy growth, folks. That's huge, huge appreciation. Again, above the costs of other goods and services in the economy. That's the important thing to remember, is that when prices go way above the costs of other goods and services, that's a warning sign. It shouldn't really happen that way. It means that wages likely aren't keeping up with those prices. Now, the question at hand, and I'm sure many of you are asking from around the world, is, okay, this is good information and helping me know which countries might be in the biggest bubbles, but what about the timing here? When's the collapse going to occur, and which countries are going to get most impacted by this collapse? And I think at this point we need to start talking about China. China is in a huge, huge bind right now. There's an impending economic collapse coming. There's an impending housing crash coming. And I'm sure a lot of you have heard about all the issues that Chinese property developers had. Evergrande is probably the most notable, with over $300 billion in debt. It looks like Evergrande is going to default on a lot of that debt and might cease doing business very shortly. And this is a key thing to understand, because this could have a big contagion effect on the worldwide economy and the worldwide housing market. And if we continue to see housing market distress in China, where we've seen a 20% decline in home sales year over year, where we've seen actually a decline in home prices in October, the first time we've seen that in 6 years in China. If that continues, it can easily spread to the rest of the world. However, it's not going to impact all countries and all local markets the same way. Countries that should be concerned about contagion from China are the ones that are more speculative, more investor-based, the ones where prices are way above the levels of wages and inflation determined by the local economy, because it's these ones that have the most downside to fall. Places like Canada, the US, Germany, Poland, Russia, these housing markets, by virtue of prices being so high above inflation, it means they're being stimulated by speculative, non-fundamental means. And what do I mean by that? It means that local buyers can no longer afford prices in those markets since the prices have gone up way above wages and inflation. So who's buying in these markets? Well, it's investors. It's rich people buying second homes. It's flippers. It's speculators. Those are the people in Germany and Canada and the US who are stimulating those local housing markets. And those are exactly the people who could get spooked by a worldwide contagion event coming out of China, which is the largest housing market in the world. If that housing market all of a sudden starts going down, it could affect confidence of investors and speculators who could be the first to exit. And let me actually show you what I'm talking about in more detail with specific examples from the US. And so what we're looking at on this map are the 300 largest metro areas in America on the basis of their value to earnings ratio. And I know you're asking, what's value to earnings ratio? It's, well, when you take the typical home value in a market and divide it by the average annual wage of the typical worker. And the markets in blue, these are places where home prices are cheap and that locals can still afford. The markets in red are places that are expensive where locals cannot afford. So a place like Peoria, Illinois, for instance, where the typical value, typical price of a home is only 2.7 times local annual wages, which means that it takes less than 3 years of wages to afford a home outright. Peoria, Tulsa, Oklahoma, Wichita, Kansas, Amarillo, Texas. These are places that really have nothing to worry about in terms of Evergrande or China, because why should they care what's going on anyplace else? If there's any type of global downturn or Chinese downturn in the housing market or financial crash, okay, that's not great, but quite simply, the housing markets in these metros in blue are driven not by external forces, but by locals, by local wages who can still afford homes. And so think of those cheaper US markets like Peoria, Tulsa, and Wichita as more similar to a country like Italy, where the home prices are still more kind of fundamentally aligned with the local earnings, the local inflation. The prices there make sense, and as a result, they're unlikely to get hit hard by any type of external, broader external macro event. However, the markets in red on that map, basically everywhere in California and the Pacific Coast, Seattle, San Francisco, Los Angeles, to the mountain areas like Salt Lake and Denver, down to Austin. These are places where home values are way higher than what locals earn. These housing markets in red have home prices above wages, well above wages and local inflation, which means that they're being driven by something speculative and non-fundamental. It could be investors. It could be second home buyers. It could be Airbnb investors. It could be flippers and speculators. All of these people are pushing prices up in those markets in red, making it difficult for locals to buy. Difficult for locals to buy, and that's a problem. That makes these markets all of a sudden exposed to some type of macro event like a Chinese housing collapse, Chinese economic collapse, because these markets are relying on some weird euphoric confidence that investors and speculators have, and if that confidence gets tainted, those markets go down. In many ways, these markets in America are analogous to countries like Germany and Canada, where the home prices are really high. Think of these places as speculative, non-fundamental, and all of a sudden, if there's a downturn in the global economy, if there's problems coming out of China, the largest country in the world, the largest housing market in the world, it could affect any place where prices are way above wages and inflation. That's what you need to look at. That's your risk factor. You need to be understanding how home prices are linked to inflation and wages in your local market. That's the key to determining how much downside your housing market, your investment area has. If you want more insight into that, I would suggest you guys become a channel member. Hit the join button. The cost is $5 a month. You get access to a monthly newsletter where I give all of you guys the data on the US housing market, value to earnings ratio, the map we just looked at, wages, jobs, permits, home prices, all of the things that will help determine whether your market is stable and will avoid the crash or will get hit very hard during the crash are in this newsletter. The most recent one came out about 2 weeks ago. If you want to look at that newsletter, hit the join button below. There's also a link in the description. In case you don't want to join as a channel member, that's fine. I would just ask you hit the like button if you appreciated this content. I know a lot of you have been pushing for me to do a video on international housing markets, and I'm glad to finally deliver. It just took me a little time to get the data. This data set from the OECD is unbelievable. It has home prices in a lot of countries going back 40, 50 years. And if you want to check it out, as I said, I have a link in the description. You can download it all in Excel and go nuts analyzing all the different countries. All right, everyone. Until next time, this is Nick from Reventure Consulting signing off.